Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at two currency pairs, the Aussie versus US dollar and New Zealand versus US dollar. So sit tight. Yesterday, we saw the Aussie versus US dollar move sharply higher in the Asian session. Why? Because CPI data came out stronger than expected, and then it reversed all the way down to this swing area right through here, and also the 100 and 200 hour moving averages. So buyers turned to sellers, pushing the market to the downside. We did find support buyers here initially, and then moved up to test the broken 38.2 at 0.63464 before starting another move to the downside into the U.S. Close, which saw the price down sharply from the previous day, despite the fact that the CPI data came in much stronger than expected. That momentum continued in the Asian session and trading here today, breaking below these lows right through here, increasing the bearish bias in the process. However, the momentum to the downside could not be sustained, and we started to move back and above and below those levels before basing against the level and moving higher. That moved to the upside. Where did we go? We went right up to test its 100-hour moving average right here, and just below the 200-hour moving average as well, also in this swing area through here. And what do? We found willing sellers. So we've defined a ceiling now for the Aussie versus US dollar, being the moving averages, the swing area between 0.6326 and 0.6334. Look for sellers to lean against that level. If the price is able to get above that level, all bets are off. But as long as we stay below that level, we look back toward this swing area right through here, which comes in at the 0.6295 to 0.6299. We get below that level, we'll look toward our floor here once again, between 0.6284 and 0.6288. That it would be the targets on the downside. Get below that level, and maybe it won't be the failed break that we saw in trading here earlier today, where the market broke below those levels and failed. Now, there is something to say about respecting the failed break down here. That is that the sellers had their shot. Now it's the buyer's turn, and that's what we saw with the move back up to the 100-hour moving average. So if you are a dip buyer, it might behoove you to perhaps lean against this area right through here and hope that indeed the buyers are looking to take more control and move back up through these levels. Alternatively, if the price were to break above these levels, we could potentially see further upside momentum in this pair. Now, let's take a look at the New Zealand versus a US dollar next. And again, we'll focus on the hourly chart. And if we look at the hourly chart for this currency pair, it did rise in solidarity, if you will, to the Australia dollar yesterday after the CPI data in Australia pushed its currency pair to the upside. But as you can see, the technicals did do its job right here with the price holding against the 200-hour moving average, also against the previous day highs and perhaps its lows right through here and here as well. So this level right through here at the 0.5869 line level did its job of holding the price below that level. We subsequently moved below the 100-hour moving average and then continued down like we saw in the Aussie versus US dollar, and continue in the Asian session in trading here today as well, moving to a low. But then we started to see a rotation back to the upside, and where do we find resistance sellers? Well, against the 100-hour moving average. That's the blue line in this chart. So that is going to be now a resistance target to get to and through if the buyers are to be taken more seriously. Also of interest on the downside now, I'm going to put a horizontal line here because the low prices from earlier this week at the near the 0.58058 level. Maybe this swing area up to this 14 level is now being tested. You can see that the low price here and the low price right here just corresponded with each other at the 0.5805 level. So that's going to be a close support. Like the Aussie versus US dollar, if the sellers had their shot below here and now are making their buying opportunity, this would be the area where you would want to see the support to hold in the New Zealand versus US dollar, hold this level, and then maybe we are able to get above the 100 and make a move toward the 200-hour moving average. That's the green line in this chart. Again, it was the high price from yesterday's trade. So there you have it, a look at the Aussie versus US dollar and the New Zealand versus US dollar in a 2-for-1 special. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.